Hi everyone, welcome back. You're watching Markets at Noon. I'm Mubina Kapasi, joining in with Pankaj Poddar right here in the Mumbai studios. Well, we have a new company on the block, and that is Metropolis. One of its key peers are Dr. Lal as well as Thyrocare. So it is, of course, in the entire, testing space essentially. So could categorize it under the entire pharmacy and medical space. Well, we have with us Ameera Shah, the MD of Metropolis Healthcare. Ameera, it's a pleasure chatting with you on ET Now. Congratulations on the listing. And I want to first start off by asking you what differentiates you, from competition. What is the edge that Metropolis has as a diagnostics company, because it is a sector and it is an industry that's extremely competitive.
I think while people may think that it's a very competitive industry, while there are expected to be 100,000 labs, really if you see, very few of the labs have managed to be able to build scale and profitability in the industry. Because really the biggest asset that you need in diagnostics is quality, accuracy, and most importantly trust that gets built up as a brand name. People believe that money makes a big difference in this industry, and it really does not. So really if you look at the 100,000 labs, a highly unregulated and fragmented industry, few of us have really managed to emerge, and really Metropolis has emerged as one of the leaders with a very high trustworthy brand name in the industry. So from that perspective, we actually don't believe we have too much competition.
Company has a hub and spoke model for quick and efficiency delivery. How does that impact your business, and how that has been a big differentiator?
The hub and spoke model helps with a lot of efficiency and productivity, right? Because today if you see, we do about 4,000 varieties of tests, but we don't need to do all these 4,000 varieties of tests in every laboratory, and we have something like 115 laboratories. So what we do is, in some of our laboratories we do maybe 100 to 150 varieties of tests, some of them will do 500 varieties, and the mothership, which is the global reference laboratory, will do 4,000 varieties of tests. So this keeps having the ability to be able to collect samples in one location, process them in another, and really be able to give reports still fast to patients. This allows for efficiency and productivity behind the scenes.
Okay, now there's a key parameter, realization per patient. At 847 for Metropolis, it's at the highest range in the entire industry. How do you achieve that?
It's very difficult to say what's the highest in the industry, because everybody is not in the public domain with all their numbers. But from what analysts have researched and reported, that probably we have one of the highest realization per patient in the industry, and that's their opinion really. The reason for that really is a combination of multiple reasons, but primarily because Metropolis has almost 40% of our business coming from specialized tests. And the reason for this is because people may go to a path lab in the unorganized segment for a common sugar test, but when it comes to finding out whether somebody in their family has cancer or stroke, they want to make sure they go to a really good quality lab, where they know that they'll get the right diagnosis to therefore get the right treatment. So therefore Metropolis, as a trusted name, gets a lot of this share of specialized tests, which tend to be having a higher realization per patient.
Can you talk about the margins in the diagnostic industry? Do you expect margins to be stable despite high competition, because the PE funding is now behind?
Again, I think the competition in the space that we are in is not severe at all, and therefore if you see our last 3 years, our margins have been very stable. Our EBITDA has been about 27%. Our PAT margin has been about 16 to 17% consistently. And I think we feel quite comfortable at these numbers at this point of time. And even though we've done a lot of investments in the last 2-3 years in people, in technology, in network expansion, we have not seen our margins dip. And that's also because of some operating leverage that comes through to our expansion of our B2C business. So like I said, I feel quite comfortable at these numbers at this point of time.
Okay, well, let's talk about then the coverage. When we look at the company, you say top 5 cities. Do you expect the coverage on a pan-India basis as well expected to go up, and that would perhaps cause revenue growth as well to be multifold?
Yeah, I mean, I think today if you see, we're already in 173 cities and towns all across the country. While 81% of our business comes from the top 13 cities for Metropolis, this is actually a very well diversified profile compared to most other companies in healthcare, where actually 1 or 2 cities give them a large proportion of their revenue and profit. So Metropolis actually has a very well diversified profile, which makes it actually less risky compared to other players in healthcare as well. So we believe that this will continue to accentuate, and this diversity will remain, and this will continue to keep us low risk. But also the new markets that we're getting into are giving us a much higher than normal growth, which is what is allowing Metropolis as a group to supersede not only industry but also competitors.
Thanks so much and congratulations. It's an important day in the company. The company has got listed and it's got a decent response from investors.